Welcome back, everyone. In this video, we're going to be continuing on with the Forex Beginners course, showing you guys some of the more beginner information that you need to know in order to get started trading in Forex. So the last couple of videos, we talked about some things that were very important. Number one, demo accounts, and number two, the actual money that you could potentially make from trading Forex and kind of the timeline that you can expect to seek success and what kind of success you'll be seeing. So definitely would recommend go back and watching those two lessons if you missed those, and watching all lessons previous to those. If this is the first one you're on, we will have a playlist that has each lesson, lesson one all the way through, corresponding by the number. But for those of you guys that don't know, we are following the babypips.com educational curriculum. So we do leave the corresponding pages down below so you guys can go ahead and check out the information that is directly related to what we're talking about in each lesson over on their website. So starting off in this lesson, we're going to be talking about now when can you actually trade Forex. So a big part of Forex that a lot of people don't know is that it is open 24 hours a day, 5 days a week, but there's actually multiple sessions that you want to focus on when trading. So the majority of the movement does happen during these sessions. So that basically means that it's not always profitable to be sitting at your computer trying to trade. So just because the market's open 24 hours does not mean it provides opportunities all 24 hours of every single day. So we're going to be jumping into the different sessions and also how to navigate those and getting a little bit of a peek into some of the pairs that are most profitable to trade based on pip movements, as well as some of the best sessions to trade. So let's go ahead and get started first with Forex trading sessions. So after understanding what Forex is, why it's a great market to trade, and who makes up the Forex market, now is the time to learn when you can actually trade it. So traders of the foreign exchange market normally focus their efforts around the different trading sessions. And as we discussed earlier, the Forex market is open 24 hours a day. However, that does not mean it's always active the entire day. So you can make money when the market goes up or down. You guys obviously know that. That is how money is made, but it's quite hard to make money when the market doesn't move at all. Which is obviously why we focus on the sessions, right? We need to see some type of either growth in the price or decrease in the price when trading. That's how we make our money. So that's obviously what we need to see. And those movements, the majority of them happen in these sessions. So the Forex market hours can be broken up into 4 major trading sessions. So starting off, we have the Sydney session, the Tokyo session, the London session, and the New York session. So at different times of the year, 2 of the sessions actually adjust their start and stop time. So we can see that here. We have the Forex market hours timetable charts over from babypips.com. So spring and summer in the US from March, April to October, November, we can see that Sydney and Tokyo actually do change their open and close times. So we can see that those are the 2 sessions that change when we look at the different times. This is the fall winter in the US, October, November to March, April. So we can see Sydney changes its open and close time from 5 p.m. EST and 2 a.m. EST to 3 p.m. EST and 12 a.m. EST. And then for the Tokyo session, we have 8 p.m. EST and 5 a.m. EST, and then 7 p.m. EST and 4 a.m. EST. So you guys can kind of structure your schedules around these sessions depending on which one you trade, or if you end up trading on a longer term time frame and you're not too concerned about the sessions, you can also be a little bit more lenient about when you sit down to trade. However, for me, for example, I am a bit of a swing trader with Forex, swing and position trader, kind of focus more on the macroeconomics, global macroeconomics when it comes to my strategy. But starting off, a lot of people do start off as more so day trading, finding opportunities by the day, and that requires you to sit down for a session, get prepared before the start, trade through the session, and then of course you could choose to review your trading, which is always a recommendation, directly after that session ends, or you could decide to do that all in one day on a weekend, for example, for all your trades for that week. So it just depends on how you structure your strategy and when you have time. But it is imperative that you are there for the session if you are going to trade by the session. But if you're more of a longer term trader, it's not as important per se, but you do want to still be looking at the sessions and what happens during those times. So we'll discuss more on how you want to structure your strategy and your trading plans, depending on the type of trader you are. But continuing on, the busiest times in the market are normally when two sessions overlap. So this happens for during the summer, 3 a.m. EST to 4 a.m. EST. That's when the Tokyo session and the London session overlap. And then during the summer and winter, from 8 a.m. EST to 12 p.m. EST, the London session and the New York session overlap. So we're going to take a look at average pip movements per session. So taking a look at the average pip movements of the major currency pairs, you're going to see that there's a benefit to trading certain pairs and certain sessions. So it's not just certain pairs perform very, very well during all sessions or vice versa, session to the pair, but we do want to focus in and kind of understand that certain pairs do perform better and certain sessions are better. So we can see that here. We can see that clearly right when you look at it. The London session obviously stands out. This chart is from babypips.com. You can see that they highlighted or bolded the numbers in the London session. So we can see right here that the pair that actually moves the most is GBP JPY, with the average pip movement per session at 151 pips for the London session, 132 for the New York session, and 118 for the Tokyo session. So this is actually really a very important chart to be looking at, because it's actually how I based my first trading strategy around. Now, I did end up kind of adjusting that a little bit more once I moved to more of a longer term, focused on the macroeconomics of the different countries' economies, and really was able to kind of jump around from pair to pair depending on what was actually happening in real time and possibly happening in the future with the economy of a country, instead of focusing so much on technicals. But you do want to keep that in mind, that there are certain pairs that will have more of a profit potential, which is going to allow you to possibly get in and get out and take a small amount of pips away from that movement. You're not going to be hitting 150 pips every single night, but if you can get 50 pips, 60 pips, 80 pips, even 100 pips sometimes out of a pair, you don't want to be trading, for example, USD JPY, which you can see here on average only moves 66 pips per London session, and then 59 and 51. So you do want to kind of keep that in mind, because there are going to be pairs that don't provide as much profit potential on average, but it is something that something that you want to keep in mind, and something that we'll come back to when we're actually building out a strategy. This chart was very important for me when I built out my first strategy, and still is to this day, because obviously the average pip movement per session is something very important. Shows you what you could potentially make in a session. So again, this is just the same chart, basically more so of a bar graph, but you can see here, if you want to pause the screen, basically shows the same information. But again, you can see that there's certain pairs that are going to be offering more profit potential, but that also goes both ways. Okay, if you get in on the wrong side of the trade, you're going to be losing more if you don't cut your losses, if you're not responsible with cutting your losses. So risk management is going to be very important when it comes to that. If you are trying to always trade GBP JPY, which is where I started off, and a pair that I still trade very actively to this day, you need to understand that that pair is very active and moves a lot. So you need to understand how to maneuver that and how to cut your losses and manage your risk. One of the most important things that, of course, we will discuss later on throughout the course. So that is the last slide for today's lesson, guys. Again, going over the different market hours, the sessions, and the pip movements and the pairs that benefit the most from each session. Now, again, we're going to go through that probably later on once we're constructing a trading plan and showing you guys how to actually build out trading strategy. But for now, just keep in mind there are sessions that we want to focus on, and kind of sessions that will cater more towards your style of trading that, of course, we'll identify later on throughout the course. So hopefully you guys enjoyed this video, and I will see you guys in the next lesson.